Hello everyone. I thought it'd be interesting to start off this month's update on the Morgan report to tell everyone that silver was the best performer in August. As you can see, silver led the pack of commodities by a wide margin. If you come down here to gold, it was up about 5.7% for the month of August, and silver was up about almost 20%, so about a threefold increase relative to gold. And this is typical of the precious metals. Once they start to move, silver moves further and faster, both directions, up and down, than gold. So this month's Morgan report, briefly we'll go through it here. Gold is flowing out of London into Hong Kong. Generally, as we've been saying for a long time, we're seeing the big move from west to east. In other words, gold's flowing to the east, and so is productive capacity. Massive decline in the Indian rupee, which is causing big trouble. Anyone following this market knows there's been a huge increase in the amount of gold flowing into India. They've tried to stop it to little avail. Big point here, U.S. interest rates are starting to rise at a very rapid rate. This, of course, is the bond market, which is basically the most important thing to look at. As we've been reporting, the commercial interest, read the big banks, have lightened up on the positions substantially. This means they're short positions, and now the trading funds are the ones holding a great deal of the shorts. I think anyone following Ted Butler's work is aware of that. Here's one that we surmised from the public data. Both Bill Gross and Kyle Bass imply there is simply an insolvent Ponzi scheme being run between the U.S. Treasury and the Federal Reserve. It's time to pay attention and inform those you care about. These men have great stature. Anyone in the financial markets realizes who they are and what their words mean. Talked about the age-old argument about inflation, deflation. We thought we'd revisit the extra pyramid or the extra theory of money. You can read this highlighted part quickly if you wish, but basically we put it in. Also, we pointed out for both silver and gold, this is a direct quote, William must rise to $1,500 per ounce for the gold mining industry to be sustainable, according to Goldfield Limited chief executive. Moving on to the debt pyramid that's been updated by Trace Meyer. You can see the most worthless garbage is at the top, and there's the most of it. And what happens is we go for the quality of money during a crisis, and you can read down to the pyramid, and basically as you seek more and more substantially good assets, you go through this pyramid to the downward direction. And of course, physical currency notes certainly are much more viable than a derivative on top of a derivative. But then you get to the ultimate monies, gold and silver, and you can see their relative size relative to the amount of derivatives exposure. And this could probably be updated, and the numbers would probably be even bigger. But the idea is certainly there. Interview with Sandstorm Gold from David Smith. And then, of course, we did our company updates. And then lastly, some final thoughts. Again, going back to the theme that you can't produce something at a loss for very long. From the financials released on primary silver companies, 8 of the 12 that have reported, only 2 have shown net income gains. First Majestic, 160,000, but they had held back some of their production. Silvercorp actually was the winner with 6.4 million. And that will wrap it up for a quick review of this month's Morgan report.